All right. So, welcome back, I guess, right? We took a little bit of a week off there to close out last year, which is, much needed in a lot of cases. But I'm happy to be back. I am looking forward to another great year. And this year, I have, I wouldn't say much more planned, but I think there will be more content for you to consume. Now, whether you consume it or not, that's up to you, obviously. But especially early on, as I have the initial videos coming out for the 26 mentorship, um, it might seem like there's a lot coming out. I don't think you necessarily need to rush and try and pack in as much as possible. Of course, take your time. But if you feel like there's a lot of stuff coming out, it's just because I basically took the last 2-3 weeks to kind of structure and plan out how I wanted to go about next year in general. And simply put, I'll give you guys a quick little breakdown. So, just a few things that especially to start off here, that I want to kind of get into is, for one, I want to make it so that even our midweek, like EDU calls, they're much more structured. So, for example, like, I usually lead off every call with just an index breakdown, right? And I just do that because, honestly, that's everybody kind of wants to know. All right, what are we looking like on the indices? So I like to lead off with that. But I think this year what I'm going to do is I'm going to clip that and post that separately. And as we get into the EDU portion of the call, I'll have that separate so that, look, it's 6 months from now, if you want to come back and watch another video, you don't have to sit through the first 10 minutes of me breaking down indices for something that happened 6 months ago. You know what I mean? So I think the structure of that will be helpful at the very least. But we'll have our normal weekly preps. We'll have our normal EDU sessions. So that's, one or two a week, depending. Now, again, early on, especially because I have so many ideas that I want to go through, like right off the bat, I have 26 videos just for the 2026 mentorship. And those will come out one a week. And, you know, as we go, I'm going to actually have some more coming out during the week as well, because I'll be reviewing the ICT uh, mentorship as well. We'll talk over that. Those will also be additional videos that you guys can tune into. So there's going to be a lot of videos. So I'm thinking of a way, and I might actually do this. And if you guys have any input, let me know. But what I want to do is I might just make a separate 2026, not the mentorship, but a 2026 folder, and just put weekly preps, index breakdowns, like, maybe sometimes, like, if a chart session arises, like, I'll do something like that and just put that separate from the actual mentorship content. Because again, I think, while it's happening, it's extremely valuable. But if it's after the fact, I mean, I don't know how many people really want to go back and listen to me talk about price action in January of 2025. So I think to kind of separate that, I think that'll be much more helpful, so that when you do kind of revisit old videos, or brush up on some old content, you will be refreshed. Now, the standalone videos that were going to come out, I don't know if I'm going to put them out like specifically every Wednesday. I'll drop a video or something like that. I haven't decided that yet, but with those, like, those are just going to be me talking to the screen, and then for our next EDU session, we can even begin the next EDU session going over some of the stuff we talked about in that video. So, like, kind of an extension of that pre-recorded video. So those are just things that I have planned for the year. Again, look, obviously I want everybody to make the most out of their group mentorship and all of that, membership, whatever you want to call it. But at the same time, like, this is something that I do enjoy doing. It is, for me, who knows, maybe I'll pass it along the line down to family members or something like that, maybe help them out down the road. So, like, this is kind of, I know ICT says this and it makes it all sound like, oh wow, but, like, it is kind of my life's work. So I want to make sure it's really good, and I want to make sure it's right to the point, and it's not hard to find or anything like that. And just by default, it kind of is hard to find because it's an unlisted channel on YouTube. Like, if you're not in here, you're not going to get those videos. But I don't want them to get lost. Like, that's basically it. So I'm trying to do my best to structure these in a way where you will always be able to find them at some point or another. So, anyways, that is just like a quick breakdown on what I have planned for this year. We'll go through our normal 3 days a week with our live trading. Now, for anybody who's new here and is curious about what's the deal with the live trading, we live trade 3 days a week, but they're not always going to be on the same day. The reason why I say that, this week, like, by default, it's probably Tuesday, Wednesday, Thursday, and that's just basically because that tends to be the dates with the most data points. I try to avoid days that don't have data, and the reason for that is because typically price action is not the most optimal on those days where you don't have data. For whatever reason, that 8:30 volatility that comes into the marketplace tends to send the price delivery algorithm, and it actually does deliver much more efficiently on those days. And those are the days that I want to sit around. We had a couple last year where we're just in live trading, and I'm like, dude, this is so brutal. Like, literally nothing is happening. And that's going to happen from time to time. But if I had to plan it out, and I can try and avoid those days as much as possible and make sure that we're kind of getting the most out of spending those couple of hours together in the morning, I would prefer to do it that way. So, like I said, this week, I think just by default, because tomorrow, again, I kind of want to recalibrate. I didn't look much at the market last week while I was away, and I definitely want to kind of get back up to speed and just watch candles and slowly go through. Now, with this week, we have ISM manufacturing PMI at 9 a.m. We have Tuesday. We do not have any red folder data. Wednesday, we have a lot. We have ADP non-farm employment change. We have ISM services PMI, and we have JOLTS job openings. Thursday, we have unemployment claims, and on Friday, we have non-farm payroll. Okay, so Thursday this week is just not typically a trade day for me. The day before non-farm payroll, this is I've been doing this group for like 3+ years. I really never trade the Thursday before non-farm payroll. Again, for whatever reason, that day tends to deliver price the least efficiently as possible. And when I say it's delivering it in a pretty shitty way, to be frank, when it delivers like this, essentially what that is telling you is that we're just kind of generating pools of liquidity, right? We're not necessarily going to any specific draw. We're kind of just chopping around, sitting in the same range, creating these pools of liquidity so that when you get that high impact data driver, price tends to go attack those pools of liquidity. So when you're establishing them, price action typically is not very good in that case. So Thursday we'll probably do live trading anyways, but probably going to be a pretty shitty day. But otherwise, doesn't look too bad. Tuesday looks mid, but other than that, you do have a bunch of red folder data coming in. All right. So very quickly, I talked about this last night, and I actually just made a short clip on it on Twitter as well. But we'll get a quick rundown on indices. I'll do it fast, I promise. So yearly perspective, there is a chance for a yearly imbalance. Now, of course, that is 11 months and 27 days away. So while we know that this is potentially in the back of our mind that this could happen, this is something that now kind of goes into the backseat for a little bit, right? We understand it's there, but it's not something that I'm going to harp on 24/7. Now, from a quarterly perspective, you formed back-to-back quarterly bullish imbalances, which is awesome. Okay, you haven't done something like this really since 2023, when we were establishing that new run-up through the previous all-time high. So that's really good. The problem, which not necessarily a problem at this point, but it could be a problem, and the problem is it's like 2,000 points away, that imbalance. Okay, so if we were to go and see this quarterly imbalance, it might be pretty annoying because it is pretty far away at this point. Okay, so now on to the monthly. Last month was a total joke. It really did nothing, right? It was kind of just a indecision candle. Nothing implying anything, right? We didn't get the imbalance down to suggest that we were necessarily going to go see discount of the range. There was no imbalance up suggesting that we were going to go attack buy side higher. It was pretty much a nothing burger. We kind of had that idea. After the first week or so, it kind of seemed like that was kind of what was going to be likely to happen. And no additional insights from this point, really. The only thing that I should say is that if you just look beyond NASDAQ, which I think is going to be a focal point for me to start off this year, I think I'm going to lean on ES and YM a little bit harder than I am on NASDAQ just to start the year. And the reason I say that is just because you have divergence across the board, and the laggard, or the sixth sister of the bunch, using ICT terms, was NASDAQ. NASDAQ is the only one that didn't take out a new all-time high, right? Could it be problematic? Yes. Okay. The reason why it could be problematic is because you're not going to be kind of moving in a optimal way in relation to these other indices. For example, at what point would you anticipate some sort of retracement? This is just a general price reading question. At what point would that happen? And to me, that would either come from us running into some sort of higher time frame imbalance or us sweeping liquidity, right? I'm just thinking, like, at what point does price stop going in whatever direction it's going? And in this case, it's going up. Like, why would it stop, right? And then it basically comes down to those two things. We hit a higher time frame imbalance, or we swept some sort of liquidity. Now, if that's the case with ES, YM, and Russell, what is necessarily the case for NASDAQ, the one that has not taken out that all-time high? Okay, that's where it gets a little disgusting. Okay, and that's just based on divergence, in my opinion, right? We have a level overhead, and I still think that we are going to see this showtime imbalance. It's just the way and the manner in which we're getting to that point is really kind of alarming, leaving behind some pretty bad lows. This is the final imbalance that we're working with inside of this range, and this is why I think this is ultimately going to be the pivot for quarter 1. If we blast through this, to me, that kind of sets you up beyond quarter 1. I think that actually kind of sets you up for like a really good year. But getting into this level, I got to be honest, I'm going to be hands off, and I hope that I'm wrong in this case, but I would not be surprised whatsoever if we hit this imbalance and we do ultimately reject and retrace across the board. Again, maybe it's only that 1,500, 2,000 points that I was talking about earlier with that quarterly imbalance. I don't think it's going to be this, 7,000, 8,000 point retracement or anything like that. But, 1,500 to 2,000 takes over, could take over a month or two. That's pretty annoying, right? And if you're a long-term holder as well. I mean, we get traded short side, which is fine. And I think this pivot will give us much more clarity to that. But even before getting into this showtime pivot, I think there really is one more additional pivot that I don't want to neglect. I don't want to just overlook this. And that's really the current spot that we're in right now, okay? So we gapped up to start this week, which is good. So you have the new week open gap starting here, right? Open of this candle, which is good because that gaps us back into this daily bullish imbalance. Now, if you look across the board, you look at ES, this looks way better, right? Relative equal highs, got down into discount, got into your bullish imbalance. And again, this is why I am looking more towards ES and YM, at least to start off the year, until we can kind of recalibrate across the board with NASDAQ, Dow, ES, and Russell. Okay, does that make sense to everybody? That's kind of the big takeaway for right now. I know this is typically, all right, let's look at NQ first. I'm guilty of it as well. I always pull it up initially on my videos and everything like that. I have to say, I probably will still do that out of habit, but I really want to put more of a focal point on the S&P right now. And the reason I say that is just basically because you have NASDAQ, which has totally been the laggard for quite some time now. And I don't really want to be trading the laggard. That to me, it's just suboptimal. Much more optimal trading something that looks like this versus something that looks like this mess. Okay? So that's a breakdown on the indices. I think we'll hold this pivot. I think we will go chase Showtime. And then from Showtime, I am going to be hands off. And like I said, I hope I'm wrong. I hope that we do just blast through it as somebody who's holding stuff long term, obviously. But if we were to get a higher time frame retracement from that point, that's fine. We could always, adjust as we do, especially with our shorter duration trades. But yeah, I was doing the yearly prep last night, and I was, a lot of the names that were brought up, I got to be honest, like, I didn't really see much of anything that I liked. I liked Robinhood, like, $70 lower, like, you know what I mean? Like, we were just so far in premium on a lot of things, and just to be fair, I don't necessarily think that's the end of the world, right? It's okay that we're in premium. A lot of the names actually do have premium bullish imbalances that we got into, but that just doesn't really meet the criteria for my trading models, right? I don't like trading things in premium. I think that just kind of sets you up to get into bad habits, really, when that's going to sucker you into trading that. So you might even realize that early on in this year, you're probably going to see more futures trades. You're probably going to see me take more shorter dated, scalps on indices rather than look at individual names. And again, I think that's just simply because a lot of these higher time frames across the board aren't as it's not as cut and dry. you have these higher time frame, maybe even formed a higher time frame bearish imbalance, but you're catching right inside of a premium bullish one. So it's not really the best in terms of what my setups would offer. And that's just on some. I don't want to put them all into the same basket, but that, again, that's just kind of the way that I see it right now, at least. So I am thinking, you know, I go in cycles. You're going to notice that if you're new here as well. There are times where I feel like trading indices is much better than trading individual names. And there are going to be times where I barely even look at the indices and I look more towards individual names. And really, to me, the reason that I do that, or the main reason why I do something like that, is just because what it's offering. And again, I just want to have an edge. And we talked about this a lot last year, and I'll reiterate it now, but what is that edge, right? Now, it may be different for different people, right? Everybody's a little different in terms of their approach and how they come to their conclusions, but I got to say my edge is having a higher time frame bias and being able to use that higher time frame bias to find setups on smaller time frames that would flow in that same direction as that higher time frame bias. So for example, if you have a bullish bias on something from a monthly perspective, ideally you're going to go down into the daily, weekly, 4 hour and look for bullish setups to take place, to set up for you, right? And if those bullish setups take place, those are the trades that you want to take that are going to get you into the direction of that higher time frame bias. That's trading 101. That to me is everything. Without that, you kind of got nothing, right? You're kind of just throwing darts if you're just looking at smaller time frames, because you will notice, especially if we do start to see a switch up, meaning we start to see market retrace a little bit and we're quote unquote bearish for a little bit and we're starting to see a wider scale retracement, you will notice that you're going to see bullish setups that are going to fail. And the main reason for that is because those bullish setups are not going in the same direction as your higher time frame point of interest, right? Which would be at that time lower, right? So that's really the big takeaway at this point. And, like I said, a lot of these higher time frame names, we went through for an hour and 45 minutes last night. We went through a bunch of different names, and I really didn't come out of any of those names saying, wow, this looks really good. That was, the ultimate, breaker in that scenario. So if that's the case, I know that with what I'm working with from a daily, 4 hour, hourly perspective, this is all I have. So the trade setups might not be the highest probability, or they might not be the best setups in the world, but this is something that I have to work with because again, there's not many other options. And if that's the case, then I need to know that I want to keep my risk relatively muted. I don't want to take on these huge risks on trades that are only kind of stemming from the daily time frame, right? I don't have that higher time frame context to help me out in my decision making process right now. So I need to make sure that my risk is going to be relatively muted. I'm going to have everything laid out in advance so that if I were to be wrong in a certain scenario, that trade loss was accounted for before I even entered it, so that it's not going to put me, a quick January punch in the face. I don't want that. Okay, that's not something that I'm really targeting or trying to have happen. So that's indices. That's just my thought process here to start off the year. I am going to definitely be much more focused on indices to start. I will slowly trickle into the individual names as we, kind of clear it up a little bit. But I do think we have two major pivots, one that we're currently inside of, and the second one is a little overhead. That to me is going to dictate quarter one of 2026 for us. As simple as it can be. This is really what I'm dictating the entire quarter over, which is number one, do we bounce out of this daily imbalance? If we do, what is the reaction to showtime? Or B, do we slip this imbalance here? Do we sweep these relative equal lows? From this point, do we go see showtime first? Those are all like little things, right? And at what point will I say to myself, okay, we're going down before seeing showtime? It would likely be with an imbalance through sell side here. So if we form an imbalance through these relative equal lows here, that to me is pretty convincing that we're going to go chase that 24,151. And if that were to be the drawn liquidity, then what's 200 points lower to get us into that quarterly imbalance at 23.9, right? That would then really make the most sense to me. So that's indices. Does anybody have any questions or anything about that? Anything about the approach that you had a question about or anything like that? Please let me know. Now, because I do want to get into something a little bit off the normal path here. Somebody type something, please. No, I'm kidding. I just want to make sure everybody's following along. You're good. Yes. Thank you for. Yeah, type something, please. Okay, good. All right. So now, you know what? I'm gonna leave this in, but I'm also gonna record it separately because I think this is important.